Hello, I welcome you all to the market update from 12th of February to 16th February 2024. Starting with the world economy, we had two bad news coming from UK and Japanese economy, which went to a technical recession. So starting with UK economy, the UK GDP shrunk for two consecutive quarters by 0.1% in third quarter and 0.3% in fourth quarter of 2023. The three main sectors of the economy contracted in the fourth quarter, with declines of 0.2% in services, 1% in production, and 1.3% in construction output. The main contributing factors are for this current UK's recession are high inflation, where the UK economy reached the highest inflation of 11.1% in the October month, which has caused a high cost of living crisis for the people living in the UK, as the wages have not kept up pace with the rising prices. This has caused people to cut back on their spending, which has hurt the businesses and the economy as well. The rising interest rate has also not been able to curb the inflation. However, this has made it more expensive for businesses and households to borrow money, which has further dampened the economic activity. The another reason was health sector. Health sector was affected by way of strike action of junior doctors. Even though the UK economy have went into a technical recession, most of the commentary which was received shows that it would be a short-lived, but it is having a sentimental impact on people and the world over. So it needs to be seen if the economy further slides, or the government is able to revive the growth from this point. Also, if in the next BOE meeting we have a rate cut coming into the UK economy. Now, moving to the Japanese economy. Japanese economy is also currently facing a recession, where the economy has shrunk by 2.9% in July-September 2023 and by 0.4% in October to December 2023. This has marked the Germany took over Japan as the third largest economy in the world. The causes of the recession are mostly similar to that of UK. There's a weaker domestic demand causing causing consumer to spend less during cause as a rising cost of living and concerns about job security. Global economic slowdown is impacting international trade, hurting exports and businesses. Supply chain has also disrupted after the pandemic and with the Ukraine war, causing cost of imports to be high and hindering production. Aging population of Japan has also contributed to the shrinking workforce as a long-term challenge, imposing a long-term challenge for the economic growth. The government of Japan has responded with a fiscal stimulus package where they have increased spending to boost infrastructure and support businesses. The monetary policy of Bank of Japan is to maintain an ultra-loose monetary policy with negative interest rates, which aims to encourage borrowing and investment. Even though the prospect remains for Japanese economy remains uncertain, the government measures and potential recovery in the global trade might add to some relief to the Japanese economy. The long-term issue like aging population and low productivity need to be addressed for sustainable growth. If we move to US Treasury 10-year bond yield, the bond yields were above 4%, closing at 4.2831 at the moment. If we move to how the markets have performed globally, the US market was down, was in red for this week and was close to 1% down. The European market was up and close to 1.5%. In the Asian markets, even though there was a negative news in the Japanese economy of recession, they were the leaders and they closed in the green by 8%. Rest of most of the countries in Asian markets were positive. If we India declared its IIP for the month of December, which was 3.8%. Which rose to 3.8% from 2.4% in the month of November, as activity in manufacturing had improved. This uptick was driven by manufacturing from 3.9% in December to from 1.2% in November 2023. Also, the CPI inflation number for the month of January was released, which came out to be 5.1% year-on-year basis as compared to 5.69% in the month of December. This is represented a positive trend, signifying a slight decrease in inflation. The food and beverage inflation had eased from 8.7% in December to 7.6% in January on back of favorable base and sequential easing of prices of pulses, vegetables and fruits. The oil traded above $80 a barrel, closing above 83 a dollar a barrel for the week. Gold was down by 0.01% at 61,756 per 10 gram. For the week, FII was net seller at 6,237 crores and DII bought 8,731 crore worth of equities. With this, with this DII buying, the Sensex, Nifty 50 and Nifty Bank closed positive by 1.1%. The Nifty Mid Cap was positive by 0.5%. Nifty Small Cap had a slippage of close to 0.4%. If we look at the valuations, the current Nifty PE valuation is at 22.8, which is below 5 years high and above 2 years average. The Nifty Midcap 150 trailing PE is at 27.4, which is at 2 years and 5 years high. Nifty Small Cap 100 trailing PE is at 29.6, close to 2 years high and above 2 years average. So the market seems fairly high valued at this moment. If we move to Indian bonds, the Indian 10-year government bond is trading at 7.099% yield. With this, the short-term maturities for the week have again inverted, whereas the medium and long-term yields are flat. So that is from my side. I hope you enjoyed this video. Do like, share, and subscribe our channel so you can get weekly updates from us. Thank you.